Someone you know probably bought cryptocurrency. During the last big boom, they might not talk about it anymore. That is because over half of all crypto investors from that time are now holding assets worth less than they paid. Imagine a room of 10 people who bought in. 6 of them are likely in the red. This is not a sign of failure. It is a quiet, powerful shift happening in the market. It is a sign of a market growing up. Today, the crypto market is moving with caution. Think of it like a driver tapping the brakes after a long, fast stretch of highway. Prices are not soaring to the moon, nor are they crashing to zero. Instead, we see a slow, grinding movement. Bitcoin, the first and largest cryptocurrency, is the market's leader. Its price today, October 23, 2025, is around $108,279. This is a significant number, showing strength, but it is not climbing wildly. The momentum is sideways and slightly up, a sign of consolidation, where buyers and sellers are in a delicate balance, deciding what comes next. Ethereum is the second largest player, and it acts like the market's main engine for new applications. Its price is currently around $3,828. Like Bitcoin, it is not experiencing the explosive growth of past years. Instead, it is showing steady demand. The stability suggests development and use are continuing at a healthy, sustainable pace, not a frantic one. Bitcoin has a new job. It used to be known as a wild, speculative asset, a digital lottery ticket. Today, that is changing. Big investors, like pension funds, large companies, are starting to see it differently. They are treating it more like digital gold, a store of value. There will only ever be 21 million Bitcoin. This fixed supply is written into its code. You cannot print more of it, unlike currencies governments can create. As institutions allocate even a small fraction, it creates steady underlying demand, stabilizing price. The most recent halving in 2024 reduced new supply, a key reason for current strength. Bitcoin as a steady hand is an anchor for the entire crypto ecosystem. If Bitcoin is digital gold, then Ethereum is a decentralized world computer. It is a platform, a foundation upon which thousands of projects are built, like your phone's operating system, but run by a global network, not one company. That enables financial tools, games, and digital identity systems, not owned by any single entity. There are 4 powerful forces currently steering the crypto market. The first and most important is regulation. Agencies decide what looks like a stock versus a commodity. Clear rules invite big investors and protect consumers. Uncertainty creates cautiousness. Everyone is waiting for clarity. Second, the global economy, especially interest rates. Cheap money fuels risk assets. Higher rates pull capital toward safer bonds. Rate announcements can move crypto instantly. Third, institutional investors. Bitcoin ETFs in early 2024 unlocked capital and legitimacy. Fourth, technology upgrades, faster transactions, lower fees, improved security, scalability, cross-chain connectivity, regulation rates. Big investors and technology are the winds and currents for the months ahead. Less emotion, more structure, a healthier market backbone. Know these forces and the headlines start to make sense. Outside of the 2 giants, Bitcoin and Ethereum, lies a vast universe of altcoins. Altcoin is short for alternative coin, anything that is not Bitcoin. They serve different purposes: payments, privacy, smart contracts, and more. Some compete with Ethereum, many now interoperate rather than replace it. Altcoins are riskier, like startups, versus the established corporations of Bitcoin and Ethereum. Many never recover, a few deliver outsized returns. Decentralized finance rebuilds lending, borrowing, and exchanging without banks using smart contracts. You can lend for interest or borrow against your crypto collateral. It is early and risky, but maturing rapidly. Over $150 billion are locked in DeFi today. Real capital using these systems. As tech and UX improve, DeFi could become a true alternative to traditional banking. You may have heard of NFTs, once famous for million-dollar art sales. An NFT is a unique digital certificate of ownership secured on a blockchain. A dollar is fungible, a unique painting is not. Hype cooled, but practical uses grow. Event ticketing, game items you truly own and can trade, even tokenized real estate or shares. Tokenization can make trading many assets easier and more transparent. NFTs are maturing from bubble to foundational digital ownership tech. Stablecoins are designed to hold a stable value, usually pegged to the US dollar. One coin, $1 in reserve. That stability makes them incredibly useful. They bridge banks and crypto, grease trading, enable cheap cross-border transfers, and power DeFi. If you want one clear signal to watch this week and in the coming months, focus on the Bitcoin halving echo. The 2024 halving cut new supply in half. Historically, the biggest impact appears 12 to 18 months later. Is voor de mijn eindender was voor den mijn son. We are in that window. It is not overnight. It is a slow building pressure. Watch Bitcoin moving off exchanges into private wallets, generally a bullish sign that reduces available supply. Free tools like Glassnode and CryptoQuant chart these flows. Also, watch the narrative. Are news outlets and bank reports focusing on supply and demand more than hype? The halving echo is the deep drumbeat beneath the surface, a clear guide for the rest of the year. For someone curious about crypto but wary of the risks, start slow, focus on learning. Here are 3 simple, low-risk actions. Step 1, educate. Read the 9-page Bitcoin white paper and browse Ethereum.org to grasp core ideas. Step 2, paper trade. Track a hypothetical $1,000, for example, $700 Bitcoin, $300 Ethereum, over weeks. Step 3, if comfortable, make a very small purchase on a regulated exchange. The cost of dinner or shoes. It is not to get rich, it is tuition, learning accounts, 2FA, buying and safe storage, educate, paper trade, tiny tuition purchase, a safe path into crypto, prioritize knowledge over speculation, respect risk while engaging. The crypto market of today is not the market of yesterday. The wild speculative frenzy has given way to quiet construction and thoughtful adoption. The tourists have left, and the builders have taken over. Bitcoin's role as a store of value now attracts serious capital from traditional finance. Ethereum keeps evolving, becoming a more efficient platform for a decentralized internet. Technology is catching up to the promises. Challenges remain, regulatory uncertainty and the macro economy still sway direction. Altcoins are high risk, DeFi and NFTs are still early. The foundation built now is stronger, deeper, more resilient, based on code, utility, and supply-demand clarity. Watch regulation, rates, institutional flows, tech upgrades, and the echo of the halving. Do not jump in blindly. Learn, observe, and engage cautiously. The market is rewarding patience and research over impulse. The noise has faded, the signal is clear, and a sturdier financial and digital framework is rising, piece by piece, day by day, on solid ground.